Hello, everyone, and welcome to Advanced Purchase Card Management. My name is Jolene McDonald, and I work for the Center of Charge Card Management on the GSA SmartPay program. I have over 20 years of federal experience, 17 of which are on the GSA SmartPay program, and I've been involved in both the transition from GSA SmartPay 1 to SmartPay 2, and also from GSA SmartPay 2 to SmartPay 3. Today, we are going to look at regulations and policies to consider as you run your purchase card program. And we're going to dive into some examples of some things that you might want to consider as you develop your policies and procedures. This course will get you thinking about unique ways on how you can better utilize your purchase card program at your agency. After the recorded portion of the session, please stick around for a live Q&A, and I'm happy to answer any additional questions you might have. In addition, if you have any questions while we go through the presentation, I will be available in the chat section to answer those real time. With that, let's get started. I know that many of you have a lot of experience in the day-to-day operations of running a purchase card program and are often tasked with developing policies and operational guidance for your programs. Today, we have several key learning objectives to help you leverage best practices to strengthen your agency's overall purchase card program operation. Today, we will discuss purchase card program regulatory guidance and policies from a government-wide level, some best practices that agencies and organizations currently utilize to manage their purchase card programs, purchase card program innovation and ideas on how you can improve your program and take it to the next level, and resources to help you to take the next steps. Finally, we will have a question and answer time after the presentation via live chat. Also, please feel free to put any questions in the chat throughout the presentation, and I will do my best to respond to them in writing, even throughout the pre-recorded session. Running a purchase card program is not for the faint of heart. There are a lot of regulations and policies that provide guidance and requirements pertaining to running your purchase card program. We are going to have a quick overview of some of the key policies and regulations so that you have a good grasp on the type of information available as you navigate purchase card program management. Some key regulations and policies for the purchase card program are the Federal Acquisition Regulation, or FAR for short, the Treasury Financial Management Manual, or TFM, Public Law 112-194, also called the Government Charge Card Abuse Prevention Act of 2012, and OMB Circular A-123 Appendix B. FAR Subpart 2.101 outlines various thresholds for the micropurchase threshold. These thresholds are important to learn and outline for your cardholders so that they are aware of their authority and limitations depending on the situation. In general, the micropurchase threshold is $10,000. However, as you can see on the above chart, there are several exceptions, including varying micropurchase thresholds for things like construction, services not subject to the Service Contract Labor Standards, or SCLS, supplies or services from institutions of higher education, and purchases in support of contingency operations, both within and outside of the United States. It is important to note that although the general micropurchase threshold is currently set at $10,000, it is up to your agency to determine the various limits on purchase cards. For instance, you may prefer to have all cardholders without contracting authority set to a limit of $10,000, or you may choose to have a tiered approach by providing a group of cardholders with a $10,000 limit and lower limits to other groups of cardholders based on their purchasing activity and/or the types of purchases that they make. FAR Subpart 13.201B and 13.301 focus on specific acquisition regulations surrounding the use of the purchase card. The FAR states that the purchase card should be the preferred method to purchases and pay for micropurchases. The purchase card is a much more efficient and streamlined payment instrument compared to traditional payment methods. In addition, and one thing that many agencies don't realize, the FAR states that agencies should encourage the use of purchase cards by contracting officers to place orders and make payments under contractual instruments, including but not limited to contracts established under FAR Part 8 procedures, such as GSA schedules contracts. One of the most underutilized areas for purchase cards is making contract payments. Agencies have a major opportunity to increase their purchase card spend, and therefore increase refunds by leveraging this FAR section and exploring more ways to make contract payments via the purchase card. In 2012, Congress enacted the Government Charge Card Abuse and Prevention Act. This public law outlined many of the policies and procedures provided in OMB Circular A-123 Appendix B in a more formal document. The public law outlines several key areas of management of purchase card programs. First, it discusses required safeguards and internal controls that should be included in your agency's policies. It is important for policies to discuss how to establish and maintain purchase card accounts, including how to set up single transactions or overall purchase limits. As we discussed earlier, this may include outlining various roles and micro-purchase levels within your purchase card program. Another area discussed in the public law is outlining reconciliation, certification, and record retention requirements for purchase card holders. Third, agencies should have policies in place discussing the need to review purchases utilizing the data mining tools provided by the banks and brands within the GSA SmartPay 3 master contract. Agencies' policies outlining data mining procedures and guidelines assist in preventing erroneous and improper or illegal purchases. Purchase card managers should utilize data mining tools to flag and review suspect transactions or purchases. Finally, the public law outlines refund validation and training requirements. Purchase card managers and purchase card holders must take training a minimum of every 3 years. Agency policy, however, may require more frequent training. The public law also outlines important refund validation requirements. Agencies are responsible for validating the quarterly refunds provided by the bank. Your bank should provide refund reports and refund guides that give you the appropriate tools to be able to adequately validate refunds received. Another key area addressed by the public law is penalties for violations. As discussed in the last slide, your agency policy should outline procedures for reviewing purchases to flag illegal, improper, or erroneous purchases. This section of the public law discusses the next step in policy development, what to do if you find these types of purchases during the review process. When developing agency policy, it is important to outline the appropriate punishments for adverse personnel actions, including employee dismissal procedures as necessary. All executive agencies with greater than $10 million in purchase card spend must provide a semi-annual report on violations to OMB by the agency's Inspector General that includes a description of any illegal or improper purchases and the personnel action taken for each violation. The last key area outlined in the public law is risk assessments and audits. The public law requires IGs to conduct periodic reviews of purchase card programs to identify and analyze potential risks. It is important to include procedures and guidance on how to address audits for purchase card managers and cardholders. This may include the type of information that they must provide to the IG, specific reports, specific documentation requirements, and timeframes for working with the IG. IGs may review specific transaction information to look for things like spend patterns, and may also review agency guidance and policy to determine if there is a need to include other procedures to lower risk or encourage an increase in spend through the program. IGs are required to report their findings and any implementation updated procedures back to the head of the agency and OMB. The final piece of guidance that we will discuss is OMB Circular A-123 Appendix B. The circular provides agencies with a framework to best manage their charge card programs. Although we are discussing the circular in terms of the purchase card program, it is also applicable to other business lines, including travel and fleet. The circular is a more detailed document that aligns with Public Law 112-194 and covers various topics such as internal controls, training, performance metrics and reporting, and refund management. The OMB circular outlines several areas of internal controls that agencies should address when making policy decisions. They are, first, the application process. Understanding the process flow of application from completion of online through the review and approval. Understanding the delegation of authority, meaning what level of authority the credit limit does a cardholder have. If it is an AO or AOPC, how many cardholders they will oversee. Training, ensuring that applicants take the appropriate training for their delegation. For example, an AOPC should take AOPC training at a minimum, but some agencies may require them to also take cardholder training. Next is the transaction process. Your policy should outline the dispute process for cardholders so that they are aware of how to file a dispute and the timeframes involved in filing a dispute. It should also outline what constitutes an improper transaction and the potential punishment for violations. The review and approval process. Policy should outline how a cardholder reconciles transactions, how they maintain documentation to show valid transactions, and the approval process for your approving officials. Agency policy should include reconciliation timeframes to ensure that the cardholders are reconciling properly. Finally, the charge card management process. Policy should spell out a clear separation of duties, how to handle delinquencies, span of control, and invoicing approvals and payment processes. For example, a cardholder should not be their own approving official. Approving officials should not have an unreasonable amount of cardholders under their purview to ensure adequate checks and balances. Delinquency timeframes should be provided to cardholder and approving officials to ensure that the payments are made in a timely manner. Not only can late payments affect refunds, but also affect the agency by triggering a requirement for the prompt payment interest after 30 days. In addition, if an account is delinquent for too long, the account can be suspended or canceled in accordance with the GSA SmartPay 3 master contract. Another key area outlined in the circular is training. As discussed previously, card managers and cardholders must take training a minimum of every 3 years. Many agencies have additional training requirements. The training can be taken through the GSA SmartPay training website, which has purchased cardholder and AOPC training modules, specific agency training sites, or a combination thereof. The training should cover a variety of topics, which may vary somewhat depending on the role of the individual cardholder, such as card management functions, the EAS, and how to utilize data analytics tools and reporting to maximize program oversight and efficiencies. A third area outlined in the circular is performance metrics and reporting. Previous versions of the circular contained a large amount of agency quarterly, semi-annual, and annual reporting requirements. After review, OMB streamlined a large amount of the reporting to focus on the key areas of the GSA SmartPay program. The current OMB circular requires annual statistic and narrative reporting. GSA has taken the role of maintaining and reporting on behalf of the agencies. Annual statistic reports include items such as the number of purchase accounts and the total purchase spend amount for the year. Annual narrative reports include items such as descriptions of agencies' best practices and information on delinquency monitoring practices. Agencies provide required supplemental information for these reports directly to GSA CCCM, and the final report information is provided to OMB on behalf of the agencies. The final area covered by the circular is refund management. Your agency policies and procedures should provide guidance on ensuring the time payments to avoid delinquency and additional prompt payment interest, as well as provide strategies on how to maximize refunds through increased spend or more timely payments. One of the most important things for agencies to review when looking at refunds is their task order pricing document and how their pricing is established. These pricing agreements should be reviewed at least annually, prior to option extensions, and prior to any task order recompete. There are several valuable tools that are out there to assist with reviewing and validating refunds, including refund review guides, quarterly refund reports, refund review tools, and the GSA SmartPay Data Warehouse dashboard. Now we are going to go over some best practices and audit findings in the management of purchase card programs as found in OMB Circular A-123 Appendix B, and tips and tricks from some of your peers. First, maximize use of reports and bank and brand tools. Under the SP3 contracts, there are numerous mandatory reports available at the agency level. They are listed in Section C.7.3.1 of the Master Contract. Reports such as the Delinquency Report, Fraud Analytics Report, Invoice Status Report, and Transaction Dispute Report, among others. Ad hoc reports are also available, and if you don't know how to pull your own reports and have yet received training, contact your Level 1 AOPC for information on how to schedule training. Next, leverage purchasing power using category strategic solutions that permit the use of charge cards as ordering and payment solutions. The federal government spends billions of dollars each year through purchase card programs, as well as other contract mechanisms, and each transaction has the potential to increase the sourcing power of the government. Purchase program managers should be aware of any agency-specific requirements to ensure compliance with strategic sourcing. Often these contracts or ordering vehicles can include the use of purchase card to streamline the acquisition process and add further value through the generation of refunds. Third, institute internal management controls to mitigate risk of misuse or delinquency. Implement strict internal controls that mitigate charge card risks to the greatest extent possible. Perform periodic reviews of spending and transaction limits to ensure appropriateness. Conduct internal charge card program reviews on a regular basis to ensure internal control mechanisms are adequate. Monitor reports to identify potential split purchases. Perform periodic reviews of the number of charge card accounts in use for appropriateness of number, as well as evaluating the span of control for approving officials, and keep current on new and innovative solutions to detect and identify potential fraud, misuse, and delinquency. Finally, initiate administrative or disciplinary actions for card misuse, abuse, and repeated account delinquency. Agencies must otherwise comply with all applicable law and regulatory guidance in determining whether to impose disciplinary or adverse action in any specific case. And you can initiate verbal counseling and warning, provide written warning, suspend or revoke charge card privileges. You can suspend or revoke employee security clearances, include misuse or delinquency occurrence in employee performance evaluations, suspend or terminate employment, ensure consistent enforcement of penalties, and publish actions taken by the agency for misuse of charge cards. Learn from others by reviewing audit reports and findings. At our website, we maintain a repository of audit reports related to charge card programs. You can review the audits to assist with policy determinations for your agency. There are several internal controls that can and should be instituted to mitigate risk as part of a normal program management. Assignment of duties should be separated by individual. Are your duties or organizations separated out for authorizing, approving, and recording transactions, receiving assets, approving statements, making payments, certifying funds, and reviews or audits when possible? Appointment process for cardholders and approving officials. Do you have a process for card application, issuing appointment letters to cardholders and approving officials to define roles and responsibilities and adequate recurring training? Span of control. Is the number of cardholders assigned to each AO reasonable? Is the number of cardholders and AOs assigned to an AOPC reasonable based on the volume of spend and organizational structure? Transaction and approval process. Is there a policy in place about how purchases are approved? Are they approved prior to the purchase? And if so, by whom? Should the approval always be in writing? Is there a desired required format that lists specific information that must be included? Finally, reconciliation and delinquency controls. Are you using the canned reports available? Has your agency worked with your bank for customized alerts? Are statements being reviewed promptly? What is your audit process and how often do you audit? The circular section 2.4 purchase card internal controls talks to specifics of having such questions and more answered as part of agency policies for the charge card program. Now that you have gone over some high-level regulatory and policy information, as well as high-level best practices, let's dive into some specific common examples of policy considerations for your agency. These examples may come up often in the course of running your purchase card program. Our first policy consideration is Section 889, Prohibition on certain telecommunications and video surveillance services or equipment. Section 889 was implemented as part of the fiscal year 2019 National Defense Authorization Act. It contains two parts. Part A includes language that prohibits the government from obtaining equipment and services from a defined list of covered entities. This part is applicable to purchases, including commercial items and micro-purchases. Part B focuses on language related to prohibition of entering into contracts with covered entities. It is applicable to all contracts regardless of dollar value or sector. Agencies are required to develop their own policies and procedures to ensure charge card program compliance with Section 889 Parts A and B. Agency policies should address all business lines. First, as a best practice, agencies may desire to consider a policy emphasizing the security benefits of leveraging existing federal contracts and ordering sites such as GSA Advantage, FedMall, GSA Global Supply, Category Managed Solutions, or other agency-specific vehicles. Remember from our previous slide that Part B requirements apply to all government contracts, so these vehicles will already fulfill Section 889 requirements at a broader contractual level. Agencies are required to develop their own policies and procedures to ensure charge card program compliance with Section 889 Parts A and B. Agency policies should address all business lines. First, as a best practice, agencies may desire to consider a policy emphasizing the security benefits of leveraging existing federal contracts and ordering sites such as GSA Advantage, FedMall, GSA Global Supply, Category Managed Solutions, or other agency-specific vehicles. Remember from our previous slide that Part B requirements apply to all government contracts, so these vehicles will already fulfill Section 889 requirements at the broader contractual level. Agencies may also consider placing limits on buying open market information technology equipment or services when writing agency purchase card policies. This could include directing small IT buys to contracting officers or considering requiring advanced approval through an appropriate office for high-risk items such as computers and peripherals, phones, security cameras, or drones when planning an open market purchase. Third, agencies can leverage GSA SmartPay bank reporting tools to run transaction data queries using MCCs in GSA SmartPay Contractor Bank EAS. This can help gauge potential purchase risk. For example, the transaction data report could include MCCs such as computer and software equipment, electrical parts and equipment, telecommunications services, and electronic sales. Finally, policy updates should also include supplemental cardholder, AOPC, and approving official training on Section 889 policies and procedures. The GSA SmartPay purchase card online training modules have been updated to reflect Section 889 requirements to assist agencies with training needs. Last, GSA SmartPay is finalizing a Section 889 search tool that will allow cardholders to easily search merchant information to determine whether or not the merchant is in compliance with Section 889. The tool will be housed on the GSA SmartPay website and will be available for use by the end of fiscal year 2023. This slide shows a couple of screenshots of the Section 889 tool that will be located on the GSA SmartPay website. This tool is a user-friendly tool where cardholders can search by business name, website, CAGE code, or SAM.gov unique entity identifier. The tool will show a registration summary indicating whether or not the merchant is 889 compliant. A cardholder can utilize the resulting PDF information for their purchase card files to show compliance with Section 889 requirements. Our second policy consideration is training purchases. The Government Employees Training Act, or GETA, gives each agency general authority for employee training. The law says that the head of any agency may pay or reimburse the employee for all or part of the necessary expenses of training. Based on this law, agencies may choose to make a determination that training, education, and professional development, when authorized on the agency's training authorization form, is not a FAR-based transaction, and the micro-purchase threshold for services does not apply to these types of transactions. DoD, for example, uses the purchase card to purchase training authorized by use of a single SF-182 to a cap of $25,000 per transaction. If the agency determines that training is not a FAR-based transaction, the micro-purchase threshold would not apply, and the purchase card may be used up to the lesser of either the single purchase limit of the cardholder or any training purchase threshold set by the agency. If the training is a FAR-based transaction, the purchase card can be used up to $10,000 in accordance with agency policy. Your agency's policy should address various types of training purchases, such as individual training for an existing course, existing commercial off-the-shelf training, tailored training, and subscriptions for training access. It is important to note that when purchasing individual slots in the existing courses, each slot may be considered its own transaction even when paid together, as allowed under agency policy. This slide shows some considerations that you might want to do when putting policy into place. First, has your agency made a determination about the classification of various training transactions as FAR-based or not? Second, how is the purchase card being used? As a procurement mechanism on the open market, ordering mechanism against an existing contract, or payment mechanism to pay for training acquired by other means? Third, what type of training is being purchased? An individual slot in existing course for import to the agency, tailored training, or a subscription for training access? Training can be procured through government and non-government sources. Training from non-government sources must be for regularly scheduled commercial off-the-shelf courses, training conferences, or instruction, available to the general public, and priced the same for everyone in the same category. While some agencies allow the purchase of tailored training up to the micropurchase threshold, others require that any tailored training must be procured by a warranted contracting officer. Typically, tailored training requires a detailed statement of work and reviews by parties such as the agency's training office, human resources, or other professionals. Agencies should review policies related to training, including human resource, employee development, and procurement regulations in conjunction with any specific agency purchase card policy. Our third agency policy consideration is long-term rental or lease of land or buildings. Per the GSA SmartPay 3 Master Contract, Section 8.14.1, the contractor shall have a mechanism to further restrict the use of a purchase account for the purchase or acquisition of long-term rentals or lease of land or buildings. Long-term is defined as any rental or agreement or lease that extends beyond a 12-month period and is intended for more than a temporary basis. In the case of long-term rentals or lease of land or buildings, the purchase account may only be used as a payment mechanism within the account holder's authorized purchase limits, considered of recurring payments, limitations, and consideration of agency organization-specific policy. Agency policy best practice number 4 is conference space purchases. From time to time, your agency may want to rent out conference spaces for things like training or large meetings. Unlike our previous example, rental of conference space is considered a short-term rental or lease agreement, meaning the agreement is in place for less than 12 months. Purchase accounts may be used as a purchase and payment mechanism in the case of short-term rentals or leases, within account holder authorized purchase limits and after consideration of agency-specific policy. Examples of appropriate uses of a purchase account for rental agreements of lease or land or buildings include purchase or payment of a conference facility to house a 5-day conference or meeting, purchase or payment of office space to house an agency for 3 months during response to a natural disaster or an act of terrorism. Note that your agency will want to consider putting a contractual agreement in place, like a task order or contract, and utilize the purchase card as a payment mechanism to ensure payment terms and conditions are outlined in areas such as ancillary costs, for example, cleaning fees, placed on the purchase card. Another topic of discussion that agencies bring to our office frequently is toll payments. Toll payment policy is greatly debated among agencies. Agency policy dictates if purchase cards can be used to charge per toll or replenish funds. Accounts must be in the name of the agency, not a person. Agencies must give consideration to the advance payment statute when establishing toll payment policies and guidance. In addition, agencies should consider the following. For individually paid tolls, individual tolls are considered an on-demand requirement, meaning that each demand, such as going through a toll booth, is unrelated to the demands before and after the other tolls in other locations by other individuals. Each toll is therefore an individual requirement or transaction. For establishing a prepaid toll account, these accounts are considered prepaid because the account automatically replenishes funds using charges against the purchase card. It is up to the individual agency policy if they will allow cardholders to establish prepaid accounts with their purchase card and under what circumstances, to establish controls for use, and how such charges will be reconciled. With prepaid accounts, there's typically a monthly recurring charge if tolls have been debited to bring the account back to the required minimum dollar amount. The limits on recurring payments apply in this case and can impact the use of the card in this manner. Agency policy dictates if the cards can be used for toll systems that require a card on file to charge either per toll or replenish the funds. In the case of Easy Passes and other accounts where they're on file, as we said before, the advance payment statute must be considered. This statute says a payment under a contract to provide a service or delivery of an article for the United States government may not be more than the value of the service already provided or already delivered. This means if you haven't already received the good or service, you can't pay for it in advance. However, there are industries where advance payment is a stipulation to receive services, such as tolls, and each agency must develop policy in these areas as part of the purchase card program management and oversight. For example, DOI includes a policy on the use of purchase cards to pay toll passes or transponders in their policy with circumstances for use. Our next policy example is utilization of a purchase card to pay for parking passes and similar fees. Similar to tolls, if an agency secures parking pass accounts that are paid on a recurring basis, such as a monthly parking pass, they should be in the name of the agency, not the individual. Similar to toll passes, agency policy dictates if purchase cards can be used to secure government accounts for parking fees that require a card on file to charge per instance of parking use. Policy example number 7 is subway tokens and Metro fare cards. Offices may use the purchase card to purchase subway tokens, tickets, and Metro fare cards for general use when employees commute across large metropolitan areas as part of their normal job duties, such as to attend meetings, hearings, or other mission-related activities. Fare cards should not be assigned to individuals, but checked out and returned to a controller. These items are considered cash equivalents and should be secured as such. The Center for Charge Card Management frequently receives inquiries from customer agencies on the use of third-party payment processors. Third-party payment processors, such as PayPal or Square, offer e-commerce or internet payment solutions for commercial transactions. The processors own merchant accounts that allow them to accept and process charge card orders on behalf of other companies. Many merchants choose to utilize third-party payment processors in order to accept payments without having to establish a merchant account through a bank. Some merchants find that this is a more cost-effective option, especially if they do not process enough transactions to establish their own merchant account to accept charge cards. Merchants pay third-party processors a transaction fee for these services rather than processing transactions through a merchant bank. Transactions using third-party payment processors are considered to be high-risk transactions, particularly those made with unknown or unusual merchants, and alternative methods of payment should always be considered. However, if a merchant is a well-known merchant or there's prior purchase history with that merchant, third-party payment methods can be safe. Cardholders should still ensure any processing terms and conditions remain advantageous to the government. It is important to note that this policy does not apply to merchants, either online or brick-and-mortar stores, who process cardholder transactions directly with a credit card processor, such as MasterCard or Visa. This exemption includes programs such as the GSA Commercial Platform Program. When deciding on appropriate use of third-party payment platforms, agencies should instruct cardholders to take into consideration the following issues. First, account establishment requirement. In some instances, the cardholder may be required to establish an account in order to make a purchase through a third-party payment processor. The individual may be asked to provide detailed information and also agree to commercial terms and conditions provided by the processor. Cardholders are prohibited to establish accounts and agree to commercial terms and conditions without consent from their legal counsel. Cardholders that agree to commercial terms and conditions without proper authority or approval may be in violation of the Anti-Deficiency Act. Second, account verification limits. In some instances, third-party payment processors require account verification after a certain dollar threshold has been reached during an established period of time. These limits vary depending on the third-party payment processor. The third-party payment processor will not process payments above that threshold until the cardholder provides the payment processor with a bank account number to verify the cardholder is an actual owner of the card. This feature is in place to help prevent and detect fraud. However, GSA SmartPay government charge cards are not linked to commercial or individual bank accounts. Therefore, it is impossible for cardholders to provide this information. This could result in a limitation on cardholders' abilities to make timely purchases, or the cardholder may be asked to create a business account which does not require bank account information, but may have fees associated with it. It's important that the cardholder be aware of which accounts may or may not be created and that they have proper authority to create an account. Third is disputes. It is possible that the dispute process may vary from the contractually required dispute process within the master contract for third-party payment processors. Cardholders should be trained and aware of the dispute process for the GSA SmartPay program before considering making purchases under a third-party payment processor. Fourth, merchant name. While truncation of merchant name is happening less and less with third payment systems, it is still something for cardholders to consider when using these tools. The truncated merchant name may create difficulty for reporting, reconciliation, and oversight purposes. And last is data. There's often less Level 2 and Level 3 transactional data available when utilizing a third-party payment processor. The cardholder may only receive the merchant name and dollar amount of the transaction when making a purchase with a third-party payment processor. Another area of policy interest is e-marketplace platform purchases. An e-marketplace is an online platform where companies can register as a buyer or seller to conduct business-to-business transactions. Examples of these type of platforms include the GSA Commercial Platform and Amazon Business. The GSA Commercial Platform contains 3 vendors: Amazon Business, Fisher Scientific, and Overstock Government. It was established based on a 2018 NDAA Section 846 requirement. There are several key benefits for agencies to consider utilizing these platforms, including automatic tax exemption when making purchases, business pricing and quantity discounts, the ability to restrict by purchase card bins, and the ability to highlight certain types of purchases such as Ability One or small business set-asides. It is important for your agency to review certain policies before implementing an e-marketplace program. First, you need to ensure that your policy includes information explaining that cardholders are restricted from utilizing their personal cards, email addresses, and home addresses when making purchases for your agency via the platform. Second, it is important to remind cardholders that they still need to follow purchase card and contract payment regulations, such as following FAR required sources of supply, micro-purchase threshold requirements, and their own spending or single transaction limitations. In addition, purchases through the platform still have normal documentation requirements similar to any other type of point of sale or electronic purchase. Third, your agency should establish top-down workflows and approval processes. These processes should already be in place, but it is important to utilize them with a marketplace purchase as well. Finally, one of the biggest benefits of the e-marketplace is that you can utilize tools to analyze purchase patterns. For example, you can analyze purchase patterns through Amazon using Amazon Analytics. Policy example number 10 is the use of purchase card by cost reimbursement contractors. Did you know that 40 U.S.C. Section 501 and FAR Part 51 allow for cost reimbursement contractors to utilize the purchase card? There are several policy considerations that an agency should take when determining the use of the purchase card in this area. First, the agency should ensure that a substantial dollar portion is cost reimbursement in nature. Second, a contracting officer must provide a letter authorizing the contractor to utilize GSA sources of supply. Third, you should understand that contractors have different regulatory requirements than federal employees. For example, contractors are not bound by FAR requirements or appropriations law requirements. It is important to take that into consideration when developing policies for a contractor purchase card program. In addition to those basic considerations, agencies may also want to consider the following when writing policy. Establish a separate hierarchy for tracking so you can clearly separate when utilizing reports. Consider having different sets of MCC controls. Contractor controls may be more restrictive or allow codes not normally allowed depending on the specific mission and needs of the contractor. It is also important to note that even though the purchase card is a CBA, in this instance, the contractor is liable as opposed to the federal government for any non-payment issues or delinquencies. The government gets the benefit of still receiving refunds on the purchase card instead of going back to the initial appropriation. They go back directly to the contractor's site of performance. Another item that is often discussed in purchase card management policy decisions is surcharges. Surcharges are fees that a retailer chooses to add to the cost of purchase when a customer uses a charge card or credit card product. It is important to note that surcharges must not exceed the negotiated network fees for merchants, or 4% in any state, and that if the merchant charges a fee, that must post a notice of the charge and list it as separate line item on the receipt. It is also important to note that not all states allow surcharges, so agencies should do their due diligence to determine which states do and do not allow them. When developing agency policy, you should make cardholders aware that they may encounter surcharges from merchants. Remind them that the surcharge should be announced by the merchant and should be a separate line item. Also, ensure that the cardholder verifies that it is allowable in the state where they make the purchase. Finally, you may want to consider including policy to require or recommend that the cardholder considers another merchant that does not apply a surcharge to avoid these fees if possible. Policy consideration number 12 is end user license agreements, terms of service, or other similar legal instruments or agreements. FAR subpart 13.202, unenforceability of unauthorized obligations in micropurchases, addresses the government's liability when a cardholder signs contract or terms and conditions as part of a micropurchase. FAR 13.202 states that many supplies or services, such as information technology acquisitions, are acquired subject to supplier license agreement. Many of these agreements contain indemnification clauses that are inconsistent with federal law and unenforceable, but which could create a violation of the Anti-Deficiency Act if agreed to by the government. The clause at 52.232-39, unenforceability of unauthorized obligations, automatically applies to any micropurchase, including those made with the government purchase card. This clause prevents such violations of the Anti-Deficiency Act. This means that if a cardholder signs vendor terms and conditions in the form of a EULA, TOS, or other instrument, which includes terms that are inconsistent with other federal laws or implied elsewhere, are not accepted by the government. The clause states that indemnification of the vendor or any person or entity of the government in terms of damages, cost, fees, or other loss or liability that would create Anti-Deficiency Act violation is unenforceable against the government, and that no government end user shall be deemed to have agreed to such clause by virtue of it appearing in the EULA, TOS, or other similar legal instrument if the agreement is invoked through a click on an I agree box or other comparable mechanism. FAR was updated in 2013 to add this protection because trying to negotiate these indemnification clauses out of vendor license agreements on a per purchase basis would take months to accomplish and many times result in finding the most agreeable vendor to the change, not necessarily the best price or product. Agencies should develop policies around the processes to be used when using the government purchase card as the procurement mechanism and the vendor requires a EULA, TOS, or other similar agreement within the government. Our final policy example is emergency purchase card use. It is important that your agency has a well thought out policy in this area so you are prepared for potential emergency situations and procedures. Agencies should review emergency and disaster response guidance, such as the Robert T. Stafford Disaster Relief Act and the Stafford Act, and the FAR to understand how to shape your purchase card policies and use during an emergency or disaster situation. It is important that you develop specific agency policy on this issue to include information to charge card managers such as AOs and AOPCs, as well as cardholders, including both those with and without contracting authority. AOPCs, AOs, and other charge card program managers should be prepared for emergency operations for all program business lines. Emergency use of the government charge card program has a number of management responsibilities related to charge card use, including developing, maintaining, and updating agency-specific policies and procedures for use of charge cards or other payment solutions during an emergency or disaster situation, working with the contractor bank to establish procedures and processes to implement during emergencies, educating and training cardholders on proper use, applicable policies, regulations, and fraud prevention strategies during emergencies. Purchase card program managers have a lot of important roles to ensure adequate and efficient responses during emergency or disaster situation. Card managers should complete general preparations and communications with cardholders for emergencies, disasters, and contingencies, so that the cardholders are aware and prepared for their roles and responsibilities. Agency policy should ensure that card managers identify and maintain a list of individual cardholders who may become active in emergency situations, such as first responders, volunteers, and contracting officers. These individuals should be aware of any increased authorities that will need to be implemented during an emergency. For example, a cardholder with a micropurchase authority may have their single purchase limits increased based on special FAR micropurchase authorities for emergency situations. Cardholders with contracting authority may also have different purchasing, contracting, and documentation procedures based on additional contract flexibilities in these instances. Policy should also account for continuing to closely monitor transactions throughout the emergency or disaster situation. Due to increased authorities and more flexible purchasing situations and scenarios, it is especially important to closely monitor for misuse and fraud. Monitoring may look different during these situations due to increased authorities and limits, so it is important for card managers to be acutely aware of the changes in processes during this time. For example, transactions that are flagged in the contractor's EAS may be okay due to increased authorities during this time, or managers may have to make tough choices to allow merchants to force transactions when they normally would not allow that to happen. As you can see, it is extremely important that purchase card managers and cardholders are properly trained so that they are aware of the increased flexibilities. Finally, agency charge card program managers should consider all available products and service offerings provided by their bank to determine whether they might be a product that would assist the agency in purchasing efficiencies and security during an emergency operation. When developing policy, you can review the GSA SmartPay 3 Master Contract product and service offerings for possible solutions that might be valuable during emergencies. And you can work with your contractor bank on getting more information and implementing solutions. One agency best practice that may be extremely helpful is to develop a cardholder deployment kit for cardholders that will be on site during the emergency. Include things like copies of policies, agency POC information, disaster response to vendor information, local area information such as maps, and paper purchase logs. This gives the cardholders useful tools and reminders of how to purchase throughout the emergency. Now that we have discussed numerous specific policy examples and best practices for your purchase card program, let's get into a couple of other important areas of consideration for successfully managing a purchase card program. One area of the master contract that is especially important for purchase card oversight is the area of data mining and case management. The GSA SmartPay 3 Master Contract contains many data mining and case management requirements for the contractors to provide tools to assist your agency with finding and analyzing potential fraud, waste, and misuse. The first type of tool that's offered is fraud analytics tools. The SmartPay contractor banks provide internally or via the brands fraud analytics tools that use real-time data and random data signatures that are tracked within all data repositories to monitor data packets. If an unauthorized packet is detected, it will trigger an auto-severing program to prevent data breach. These tools also analyze transactions and test each transaction against specific rules established by your agency. The system identifies and reports all non-compliant transactions. At an aggregate level, an analysis of all completed transactions against all new transactions can be made to detect patterns of potential fraud and then flag non-compliant transactions when potential fraud is detected. The second type of tool offered are case management tools. The contractor banks provide internally or via the brands case management tools integrated with the contractor bank's EAS that enable high-volume automated processing of cases leveraging data mining, fraud analytics, and risk determination. Data is seamlessly integrated from the contractor bank's data mining and fraud analytics solutions. If your agency is not taking advantage of these types of offerings provided by the contractor bank, I highly recommend that you reach out to get more information about your bank's offerings and how to implement them into your purchase card program oversight. Finally, no advanced program oversight presentation would be complete without mentioning audits. Many of you deal with purchase card program audits on a regular or recurring basis. One of the key ingredients to a successful purchase card program is ensuring that you have all of the policies and tools in place to have successful audits. The GSA SmartPay program is a highly visible program, and Public Law 112-194 outlines many requirements for audits of this program. Although audits can be a heavy lift for many program managers, they are important to ensure that agencies are in compliance with policies and are working diligently to detect and deal with fraud and misuse. One best practice is to conduct your own annual reviews to get ahead of any potential future audits. This way, you will be prepared when it is time to respond to audits of your program. Our program's website has several audit resources available to your agency's use. These resources include a sample annual review checklist and summary findings document that you can leverage to put annual reviews in place for your agency, as well as the GSA SmartPay audit repository, which includes examples of audits previously completed on various card programs within the federal government. It is important that you utilize and leverage these important resources so that you are prepared. When looking through audit reports, regardless of the agency and fiscal year, there is a pattern of findings that exists. Learning from these patterns provides direction on what areas to target in your annual review of your program management controls, purchase card policies and guides, refresher training, and other training materials for cardholders, and in your day-to-day management of the program. First, strengthen systematic oversight and internal controls to include regular reviews of hierarchies, maintaining account status, internal audits of purchase card transactions, files, and logs, identification of split purchases, patterns of potential misuse, non-compliance with policy, and categories of high-risk purchases and appropriate disciplinary action when misuse and abuse are found, such as suspending cardholders or approving officials who fail to take training or are repeat offenders. Second, strengthen documentation to support purchases. Ensure written authority and description of the product or service purchases is present. Obtain proof of a purchase, such as receipts and invoices, and proof the government received supply purchases. Third, educate approving officials on what to look for in the review of a transaction on the cardholder statement and provide regular training as a refresher. Fourth, educate cardholders about what constitutes an improper purchase, that sales tax must be removed at the time of purchase, and to rotate vendors when making repetitive purchases. The best way to learn is from the mistakes of others. Using those mistakes to poke holes at your own policies, procedures, and training to make sure they are airtight is a great way to keep your program running in top shape and sustain any audit scrutiny. This slide contains some helpful resources that you can utilize to learn more about the GSA SmartPay program policies and guidance. We hope you find them helpful as you manage your purchase card program. Thank you so much for attending the presentation. If you have any questions or need any additional information, please do not hesitate to contact us. I have provided my personal email address as well as the general GSA SmartPay address. Thank you for attending this session. I hope you enjoy the remainder of the forum.